Based on the historical data and forecast, Bitcoin shows a downtrend with a recent dip below the support level of $73,400. The RSI consistently hovers below 50, indicating a weakening momentum, with values frequently approaching the oversold level of 20. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the forecast predicts further price decline. Therefore, I recommend a short position strategy. The entry price will be $73,500, capitalizing on the initial forecast dip. A stop loss will be set at $73,800 to protect against a potential short-term reversal. The target price will be $71,400, aligning with the forecast and anticipating further downward movement. To refine this strategy, I suggest incorporating RSI signals. If the RSI falls below 20, consider entering a long position at $72,600, with a stop loss at $72,300 and a target price of $73,000, aiming to capitalize on a potential bounce. Conversely, if the price breaks above the upper Bollinger Band, indicating a potential breakout, consider a short position at $73,000 with a stop loss at $73,200 and a target price of $71,900. This combined approach, blending forecast data, support and resistance levels, and RSI signals, will create a dynamic and adaptive portfolio designed to maximize returns while managing risk. Based on the historical data and forecast, Ethereum exhibits a downtrend. The price has consistently approached the support level of $1,940 and the RSI consistently stays below 50, indicating a bearish sentiment. The forecast for the next week projects a continued decline, reaching as low as $1,910. Considering the RSI, which is currently around 31 to 35, we are not in an oversold position yet. However, the price is approaching the support level and the Bollinger Bands are narrowing, suggesting a potential for a bounce. Therefore, I propose a contrarian strategy. We will enter a long position at $1,950, placing a stop loss at $1,940, just below the support level. The initial target price will be $2,000, aiming to capitalize on a potential short-term bounce. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band around $1,940, it could signal a temporary bottom. In this scenario, we can enter a long position at $1,940 with a stop loss at $1,930. The target price for this trade will be $1,980. If the price breaks below $1,940, confirming the downtrend, we will initiate a short position at $1,960 with a stop loss at $1,970 and a target price of $1,930. This three-pronged approach allows us to adapt to different market scenarios while aiming for high returns by capitalizing on short-term volatility and potential reversals. Based on the historical data and forecast, BNB shows a clear upward trend, supported by the recent price surge to $718 and a projected increase to $742. The RSI reaching 71.0 on May 31, 2026, indicates an overbought condition, but the continued upward forecast suggests a potential pullback before further gains. Therefore, my strategy is to initiate a long position at $690, anticipating a temporary dip before the price resumes its upward trajectory. A stop-loss order will be placed at $679, coinciding with the established support level, to limit potential losses. The target price will be set at $738, aligning with the forecast high for June 7, 2026, allowing for a significant profit while respecting the projected price movement. To refine this strategy, I'll incorporate the Bollinger Bands. The price consistently trading above the upper band suggests strong bullish momentum. However, a potential convergence of the bands could signal a temporary consolidation. Given the RSI is above 70, I'll adjust the entry price to $697, waiting for a slight pullback to mitigate the risk of entering at an overbought level. The stop loss remains at $679, and the target price is adjusted to $742, reflecting the most optimistic forecast. This combined RSI and Bollinger Bands approach offers a balanced strategy, capitalizing on the upward trend while managing risk effectively. Based on the historical data and forecast, XRP has been exhibiting a sideways trend with support around $1.31 and resistance around $1.33. The RSI indicates that XRP is currently not significantly overbought or oversold, fluctuating between 35 and 45. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential short-term dip. Considering these factors, I propose a moderately conservative strategy focusing on short-term price movements. We will implement a strategy based on RSI with an oversold level of 20 and an overbought level of 80. My recommended strategy is to enter a long position at $1.29, anticipating a bounce from the lower Bollinger Band and a support level of $1.31. The stop loss should be set at $1.28 to protect against a further decline. The initial target price is $1.33, aligning with the resistance level. If the price reaches $1.33, we can consider moving the stop loss to break even and setting a secondary target price of $1.35 for a more substantial profit. This strategy combines technical indicators and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Solana exhibits a downtrend, supported by the declining Bollinger Bands and the forecast prices consistently below the recent closing prices. The RSI consistently remains below 50, indicating a weakening momentum. Considering the support price of $82 and the forecast prices, a short position is recommended. We will enter a short position at $82.4, placing a stop-loss order at $82.7 to limit potential losses if the price reverses. The initial target price will be $80.4, aiming to capitalize on the anticipated downward movement. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band of $80.4, it suggests a potential oversold condition and a possible bounce. In this case, we will adjust the target price to $81. Conversely, if the price breaks above the upper Bollinger Band, it signals a potential trend reversal, and we will immediately close the position. This dynamic approach, combining RSI and Bollinger Bands, aims to maximize returns while effectively managing risk, resulting in a portfolio with high efficiency. Based on the historical data and forecast, TRON has been exhibiting a downtrend recently, with the forecast prices consistently below $0.354. The RSI has been fluctuating, with periods of overbought conditions above 80, followed by oversold conditions below 20. However, the recent RSI values suggest a weakening upward momentum. Considering the support price of $0.351 and the Bollinger Bands, I recommend a short selling strategy. Enter a short position at $0.354, setting a stop loss at $0.367, just above the upper Bollinger Band. The initial target price should be $0.346, aligning with the forecast price and a conservative profit target. To maximize returns and manage risk, I suggest a tiered approach. If the price reaches the initial target of $0.346, move the stop loss to the break-even point, around $0.354. If the price continues to decline, the next target price would be $0.344, near the support level. This strategy combines RSI, Bollinger Bands, and forecast data to capitalize on the anticipated downtrend while incorporating risk management techniques like stop-loss adjustments to protect profits and limit potential losses. Based on the historical data and forecast, Doge-Coin has shown a slightly decreasing trend over the past 2 weeks, with the forecast indicating further downward pressure in the short term. The RSI consistently hovers below 50, with several dips below 40, suggesting the asset is generally not overbought. However, the price has repeatedly tested the support level of $0.0952 and bounced back, indicating potential support. The Bollinger Bands show that the price is nearing the lower band, which could suggest an oversold condition. Therefore, I recommend a contrarian strategy focused on short-term gains. We will implement a strategy based on the RSI and Bollinger Bands. The entry price will be $0.0985, coinciding with the forecast price on June 7, 2026, and the lower Bollinger Band. The stop loss will be set at $0.0952, just below the established support level, to protect against further downside. The target price will be $0.1, aiming to capitalize on a potential bounce from the support and a move back towards the middle of the Bollinger Bands. This strategy combines the oversold signal from the Bollinger Bands and RSI with the established support level, aiming for a quick profit with a defined risk. Based on the historical data and forecast, Zcash has shown volatility with periods of both upward and downward trends. The support price consistently held at $528, while the resistance fluctuated around $571. The RSI indicator has been mostly within the 50 to 75 range, suggesting neither strong overbought nor oversold conditions recently. The Bollinger Bands have widened, indicating increased volatility. Considering the forecast prices, which begin around $610 and fluctuate, I recommend a moderately bullish strategy. We will enter a long position at $603, placing a stop-loss order at $584 to protect against potential downside risks. The initial target price will be $626, aiming to capitalize on the predicted upward movement. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI drops below 40, indicating an oversold condition, we'll consider entering a long position at the prevailing price, with a stop-loss at the lower Bollinger Band. Conversely, if the RSI exceeds 70, suggesting an overbought scenario, we'll consider a short position at the current price, with a stop-loss above the upper Bollinger Band. However, given the current forecast and recent price action, the primary strategy remains the long position at $603, with a stop-loss at $584 and a target price of $626. This portfolio balances potential upside with risk management, adjusting based on real-time RSI and Bollinger Band signals for optimal returns. Based on the historical data and forecast, Cardano shows a downtrend. The price has been consistently testing the support level of $0.233 and failing to break above the resistance of $0.243. The RSI has been consistently below 50, indicating a bearish momentum, and recently dipped below 35, suggesting an oversold condition. The Bollinger Bands are contracting, which often precedes a significant price movement. Considering these factors, I recommend a short-term short position with an entry price of $0.235. A stop-loss should be placed slightly above the recent high of $0.243, at $0.245, to protect against a potential false breakout. The initial target price should be set at $0.229, aligning with the forecast and the lower Bollinger Band. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 20, it signals a potential bounce, but given the overall downtrend, we'll use it as a confirmation for a short position. The bottom of the Bollinger Bands indicates a potential support level. Therefore, I suggest entering a short position at $0.234. Place a stop-loss at $0.245, just above the resistance. The first target price is $0.231, coinciding with the forecast and the lower Bollinger Band. If the price bounces from $0.231, consider a second target price of $0.229. This combined approach leverages both the RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Stellar shows a strong upward trend, particularly evident from May 28 onwards with significant price jumps. The RSI consistently moves above 50, nearing overbought territory, indicating bullish momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering this, I recommend a long position strategy. We will enter a long position at $0.215. The stop-loss should be set at $0.179, just below the support level, to mitigate potential losses if the trend reverses. Our initial target price is $0.267, aligning with the forecast for June 6 and the previous resistance level. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider adding to our position at the prevailing price, with a stop-loss adjusted to the recent low. Conversely, if the price touches the upper Bollinger Band, suggesting overbought conditions, we'll consider taking partial profits and tightening our stop-loss. The final target price will be $0.278, based on the forecast for June 7th. This combined approach leverages both trend analysis and short-term volatility signals for optimal risk-reward management. Based on the historical data and forecast, Jupiter shows a volatile trend with periods of both upward and downward movement. The support price remains consistently at $0.176, while the resistance fluctuates around $0.198. The RSI indicates that the asset is generally within a neutral range, occasionally dipping into oversold territory, below 40, and approaching overbought conditions, above 50. Considering the forecast for the next week, the price is expected to hover around $0.191 to $0.193, suggesting a sideways or slightly bearish continuation of the recent trend. The Bollinger Bands show that the price has been oscillating within the bands, indicating continued volatility. Therefore, I recommend a short-term contrarian strategy focusing on capitalizing on minor price dips. We will initiate a long position when the RSI falls below 40, signaling an oversold condition. Specifically, enter a long position at $0.189. Set a stop-loss order slightly below the support level at $0.176 to limit potential losses. The target price will be set near the resistance level at $0.198, aiming for a quick profit. If the price continues to fall, we will exit the position at the stop-loss. If the price reaches the target, we will secure the profit and reevaluate the market conditions. This strategy aims to profit from short-term bounces within the existing range. Based on the historical data and forecast, POL-X-Matic shows a slight upward trend with fluctuating volatility. The RSI consistently hovers around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the recent closing price of $0.09 on May 31, 2026, combined with the forecast prices ranging from $0.0922 to $0.0943, suggests a potential for short-term gains. Considering the Bollinger Bands, the price is currently near the lower band, indicating a possible rebound. Therefore, I recommend a long position with an entry price of $0.091. Set a stop-loss at $0.088 to protect against potential downside risks. A reasonable target price would be $0.095, aligning with the middle of the Bollinger Bands and a conservative estimate based on the forecast. To maximize returns, let's implement a tiered approach. Initially, enter the long position at $0.091 with a stop-loss at $0.088 and a first target price of $0.093. If the price reaches $0.093, consider moving the stop-loss to the entry price of $0.091 to secure partial profits and reduce risk. Subsequently, if the price continues to rise towards $0.095, adjust the stop-loss again to break even. This strategy combines the RSI and Bollinger Band signals, aiming for a balance between capturing potential upside and mitigating downside risks. The support price of $0.092 will also act as a buffer against further price declines. Based on the historical data and forecast, Near Protocol exhibits an upward trend. The price has consistently traded above the support price of $1.62 and has approached the resistance level of $2.55. The RSI has fluctuated between 60.8 and 87.3, indicating periods of both overbought and oversold conditions. The Bollinger Bands have widened, suggesting increased volatility. Considering the forecast for the next week, the price is expected to remain around $2.46 to $2.48, further reinforcing the bullish sentiment. Therefore, I recommend a long position strategy. The entry price for this long position should be $2.46. Given the recent volatility, a stop-loss order should be placed at $2.3 to mitigate potential losses. The initial target price can be set at $2.55, aligning with the resistance level. If the price reaches $2.55, consider moving the stop-loss to break even to protect profits. For a more aggressive target, a second target price can be set at $2.76, based on the previous high. This strategy combines trend analysis, RSI considerations, and Bollinger Bands observations to maximize potential returns while managing risk. Based on the historical data and forecast, Dogecoin shows a volatile trend with support at $1.75 and resistance at $2.07. The RSI fluctuates between 44.1 and 57.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands consistently widen, suggesting increased volatility. Considering the forecast for June 1st to June 7th, starting with $1.96, I recommend a strategy that combines RSI and Bollinger Band signals. We will enter a long position when the RSI falls below 20 and the price touches the lower Bollinger Band. The entry price will be $1.76, with a stop-loss order set at $1.75 to protect against downside risk. The initial target price will be $2.07, aligning with the resistance level. To optimize the returns, we'll implement a dynamic trading approach. If the price reaches the target of $2.07, we'll move the stop-loss to break even to secure profits. We will also consider taking partial profits at $1.9 and $1.95. If the RSI rises above 80 and the price touches the upper Bollinger Band, we will exit the position. The forecast for June 1st to June 7th suggests a potential upward movement, but we must remain vigilant and adjust our strategy based on real-time market conditions. This combined RSI and Bollinger Band strategy offers a balanced approach to capitalize on the volatility of Dogecoin while managing risk effectively. Based on the historical data and forecast, Kite demonstrates a volatile trend with periods of consolidation and minor upward movement. The RSI consistently hovered above 50, indicating a bullish momentum, but recently approached overbought territory, suggesting a potential pullback. The Bollinger Bands show that the price has been fluctuating within the bands, with the lower band indicating significant support at $0.196. The forecast for the next week projects a slight upward trend, with prices ranging from $0.213 to $0.215. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands to capitalize on short-term price swings. My recommended strategy is to enter a long position at $0.207, taking advantage of the recent upward momentum and the forecast price. Set a stop-loss at $0.196, aligning with the established support level to limit potential losses. For the target price, aim for $0.215, based on the forecast data and the upper range of the Bollinger Bands. This strategy prioritizes a quick profit from the anticipated upward movement while mitigating risk with a well-defined stop-loss. The RSI nearing overbought levels suggests this is a short-term play, so quick execution and profit-taking are essential. Based on the historical data and forecast, DeXe exhibits a strong upward trend. The price has consistently broken through resistance levels, and the forecast for the next week indicates continued growth. Considering the RSI values, which have mostly remained above 50, indicating a bullish momentum, and the Bollinger Bands consistently widening, suggesting increasing volatility and potential for price movement, I recommend a long position strategy. We will enter a long position at $18.7, placing a stop-loss order at $18.4 to mitigate potential losses if the trend reverses. The initial target price will be $19.4, based on the forecast and recent resistance levels. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider adding to our position at the prevailing price, with a slightly higher stop-loss. Conversely, if the price touches the upper Bollinger Band, suggesting an overbought condition, we will consider taking partial profits at $19.8. The final target price will be $20.7, aligning with the forecast for the week. This multi-layered approach combines trend following with reactive adjustments based on technical indicators, aiming for high returns while managing risk effectively. Based on the historical data and forecast, SKY has shown a declining trend recently, with the price fluctuating within a narrow range. The RSI consistently remains below 30, indicating an oversold condition, suggesting a potential for a short-term bounce. The Bollinger Bands show that the price is near the lower band, further supporting the possibility of a rebound. Considering these factors, I recommend a long position with an entry price of $0.0653. To manage risk, set a stop-loss at $0.0642, which is the support level. The initial target price should be $0.0681, near the recent high and the center of the Bollinger Bands. To maximize potential returns, I suggest a tiered target strategy. After reaching the first target of $0.0681, move the stop loss to the entry price of $0.0653 to secure profits and reduce risk. If the price continues to rise, set a second target at $0.0693, the recent resistance level. If the price fails to reach the first target and hits the stop loss, exit the position. This strategy combines RSI oversold signals, Bollinger Band dynamics, and support/resistance levels to create a balanced approach with clear entry, stop loss, and target points. Based on the historical data and forecast, Zcash has shown volatility with periods of both upward and downward trends. The support price consistently held at $528, while the resistance fluctuated around $571. The RSI indicator has been mostly within the 50 to 75 range, suggesting neither strong overbought nor oversold conditions recently. The Bollinger Bands have widened, indicating increased volatility. Considering the forecast prices, which begin around $610 and fluctuate, I recommend a moderately bullish strategy. We will enter a long position at $603, placing a stop-loss order at $584 to protect against potential downside risks. The initial target price will be $626, aiming to capitalize on the predicted upward movement. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI drops below 40, indicating an oversold condition, we'll consider entering a long position at the prevailing price, with a stop-loss at the lower Bollinger Band. Conversely, if the RSI exceeds 70, suggesting an overbought scenario, we'll consider a short position at the current price, with a stop-loss above the upper Bollinger Band. However, given the current forecast and recent price action, the primary strategy remains the long position at $603, with a stop-loss at $584 and a target price of $626. This portfolio balances potential upside with risk management, adjusting based on real-time RSI and Bollinger Band signals for optimal returns. Based on the historical data and forecast, Terra Luna Classic demonstrates a generally upward trend, though with some volatility. The support price consistently remains at $0.0000834, while the resistance fluctuates around $0.0000901. The RSI values have been oscillating between 48.2 and 58.4, indicating neither extreme overbought nor oversold conditions for most of the period. However, the Bollinger Bands show that the price has recently approached the lower band, suggesting a potential bounce. Combining these factors, I propose a long position strategy focused on capitalizing on short-term upward movements while mitigating risk. My recommended strategy is to enter a long position at $0.0000847, coinciding with the forecast price on June 5, 2026, and the recent proximity to the lower Bollinger Band. The stop-loss should be set at $0.0000834, aligning with the established support level, to limit potential losses. The initial target price is $0.0000873, corresponding to the forecast price on June 6, 2026, and a move towards the center of the Bollinger Bands. If the price reaches $0.0000873, we can consider moving the stop-loss to the entry price to secure profits and potentially extend the target price to $0.0000887, based on the forecast for June 4, 2026. This approach balances potential gains with robust risk management, leveraging both technical indicators and price forecasts for optimal performance. Based on the historical data and forecast, Stellar shows a strong upward trend, particularly evident from May 28 onwards with significant price jumps. The RSI consistently moves above 50, nearing overbought territory, indicating bullish momentum. The Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering this, I recommend a long position strategy. We will enter a long position at $0.215. The stop-loss should be set at $0.179, just below the support level, to mitigate potential losses if the trend reverses. Our initial target price is $0.267, aligning with the forecast for June 6 and the previous resistance level. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider adding to our position at the prevailing price, with a stop-loss adjusted to the recent low. Conversely, if the price touches the upper Bollinger Band, suggesting overbought conditions, we'll consider taking partial profits and tightening our stop-loss. The final target price will be $0.278, based on the forecast for June 7. This combined approach leverages both trend analysis and short-term volatility signals for optimal risk-reward management.